Bitcoin has been called the future of money, a financial revolution promising freedom and decentralization. But that freedom comes at a cost. Today, Bitcoin faces its greatest challenge, a growing wave of regulations and government actions that threaten its existence. Could this be the beginning of the end? Or will Bitcoin once again prove its resilience? From the start, Bitcoin has been a disruptor. Created in 2009, it introduced the world to decentralized finance. No central authority. No middlemen. Transactions verified by a global network of computers. It was a bold experiment, and for many, it symbolized freedom. But freedom often comes with opposition. Governments, accustomed to controlling financial systems, began to take notice. At first, Bitcoin was too small to matter. Then, as adoption grew, so did the scrutiny. China, for example, was once at the heart of Bitcoin's ecosystem. By 2021, it accounted for nearly 70% of global Bitcoin mining. But the Chinese government decided that enough was enough. In a sweeping move, it banned Bitcoin mining and financial transactions involving cryptocurrencies. The reasons? Officials cited environmental concerns, the potential for financial instability, and the need to maintain control over monetary systems. This decision sent shockwaves through the Bitcoin network. Mining operations shut down overnight. Thousands of miners scrambled to relocate their equipment to countries like the United States, Kazakhstan, and Canada. The hash rate, a measure of Bitcoin's computing power, plummeted. Prices tumbled. Yet Bitcoin didn't die. Its decentralized network adjusted. Miners found new homes, and within months, the hash rate recovered. Still, China's actions showed just how vulnerable Bitcoin could be to government interference. India's situation is more ambiguous. Over the past few years, the government has proposed several bills to ban or heavily regulate cryptocurrencies. Some lawmakers argue that Bitcoin and other cryptocurrencies pose risks to financial stability. Others worry about their potential use in illegal activities. While no outright ban has been implemented, the uncertainty is enough to discourage many investors. India is home to a massive, tech-savvy population, making it one of the most promising markets for Bitcoin. But if regulations take a hardline approach, it could stifle Bitcoin's growth in the region. In the United States, the approach is different but no less impactful. The US hasn't banned Bitcoin, but it's increasing regulatory pressure. The Internal Revenue Service, IRS, now taxes crypto transactions. The Securities and Exchange Commission, SEC, has targeted crypto projects it deems unregistered securities. Exchanges are facing stricter compliance requirements. These regulations are framed as consumer protections, but they also add layers of complexity for businesses and investors. Unlike China or India, the US isn't trying to shut Bitcoin down. But by making it harder to operate, the government could slow its adoption significantly. Europe, meanwhile, has introduced the Markets in Crypto Assets Regulation, or MiCA. This framework aims to bring clarity and order to the cryptocurrency market. It introduces rules to protect consumers, reduce fraud, and ensure transparency. Supporters see MiCA as a necessary step toward legitimizing Bitcoin and other cryptocurrencies. Critics, however, argue that the high compliance costs could push smaller players out of the market and limit innovation. While Europe hasn't banned Bitcoin, its structured regulatory approach could reshape the landscape for better or worse. But why are governments so focused on Bitcoin? For one, Bitcoin operates outside traditional financial systems. Transactions happen without intermediaries, making them difficult to track and tax. Governments also worry about financial stability. Bitcoin's volatility poses risks to investors. A crash could lead to widespread financial losses. Security is another major concern. Bitcoin's decentralized nature has made it a tool for illicit activities. It has been linked to money laundering, ransomware attacks, and even funding for rogue states like North Korea. These risks make Bitcoin a target for regulation. But at its core, Bitcoin was designed to resist control. As Bitcoin faces increasing pressure, governments are developing their own digital currencies. Central Bank Digital Currencies, or CBDCs, are government-backed digital versions of traditional money. They aim to offer some of the benefits of cryptocurrencies, like faster transactions, while maintaining centralized control. China's digital yuan is already in use. The European Union and the United States are exploring similar projects. CBDCs represent a direct challenge to Bitcoin. But for many, they highlight the very reasons Bitcoin exists. Unlike Bitcoin, CBDCs are fully controlled by governments. They offer convenience, but not the freedom that Bitcoin promises. Despite all these challenges, Bitcoin has shown remarkable resilience. Its decentralized network spans thousands of nodes worldwide. Even if one country bans it, the network continues to operate elsewhere. Adoption is growing. Major companies now accept Bitcoin as payment. Financial institutions are offering Bitcoin investment products. And in countries with unstable economies, Bitcoin is seen as a lifeline. For its supporters, Bitcoin isn't just a currency. It's a revolution. A movement toward financial freedom. So, is Bitcoin facing its end? Or is this just another chapter in its story? Bitcoin has survived market crashes, bans, and relentless criticism. It has adapted, evolved, and grown stronger. But the road ahead remains uncertain. Regulations could slow its adoption. Government-backed digital currencies could compete for attention. Yet Bitcoin's core values, decentralization, freedom, and transparency, continue to inspire millions. What do you think? Can Bitcoin survive the growing wave of regulations? Or are we witnessing the beginning of its downfall? Let us know your thoughts in the comments below. And if you enjoyed this video, don't forget to like, subscribe, and share. Stay tuned for more insights on the future of finance. See you in the next video.